Hey everyone, and welcome back to Talk Tickers.
The show where we like to dig deep into earnings calls,
Yeah, that's right.
uncover the insights that you just won't find anywhere else.
Absolutely, and today we are diving headfirst into Marathon Petroleum.
That's MPC on the ticker tape if you're following along at home.
And we're looking at their Q3 2024 earnings call, which just dropped yesterday, November 5th.
You may have seen the headlines already. MPC beat earnings expectations.
The stock is up over 3% today.
And they also announced a pretty hefty $5 billion share buyback authorization.
That's right.
So at first glance, things are looking pretty good.
But we always say here at Talk Tickers,
The real story is in the details.
exactly what's going on beneath the surface.
What's MPC's strategy in this ever-changing energy landscape?
And that is exactly what we're here to figure out.
We've got the full transcript and the presentation pulled up in front of us
We're ready to really dissect this thing.
and extract all the insights we can for you.
So let's start with the big picture.
The overall refining landscape.
MPC's CEO, Marianne Mannan.
She actually painted a pretty interesting picture during the call.
Yeah, she seemed pretty optimistic.
She sees demand for refined products.
Like gasoline, diesel, jet fuel, all of that.
And she expects that demand to actually keep outpacing capacity additions,
For the rest of the decade.
which is huge.
That's a big deal.
So think about it like this.
Refiners, they've got the products that people need.
And there's not enough supply to totally flood the market and push prices down.
So what does that mean?
Potentially higher margins for companies like MPC.
Which translates to what?
Higher profit.
And more money in your pocket as an investor.
Exactly. Whether that's through dividends.
Or stock appreciation.
Right.
But wait a second.
What?
Didn't Q3 have some pretty significant volatility?
Oh, yeah, absolutely. There were definitely some ups and downs.
So it's not all sunshine and roses.
Well, no, and Marianne Mannan addressed that head on.
What'd she say?
She pointed to a few factors that were contributing to that volatility.
Like?
Well, for one, there was a lighter than usual turnaround season for refineries.
Okay.
There were also fewer supply disruptions than people were anticipating.
So less disruption means what?
Less of a price spike because things are running smoothly.
Okay, makes sense.
And then, of course, there's always that uncertainty about global economic growth.
Especially in China.
Yeah, exactly.
So even with this potentially favorable mid-cycle environment,
Things can change quickly.
very true.
That's the name of the game, right?
It's a volatile market.
But remember, we're looking at long-term trends here.
Right.
And the underlying demand for refined products seems pretty solid.
So let's shift gears a little bit
Okay.
and talk about MPC specifically.
All right, let's get into the nitty-gritty.
Marianne Mannan, she really emphasized their commitment to operational excellence.
And really sharp commercial execution.
They're not just talking the talk.
They're walking the walk.
And how do we know that?
Well, they actually achieved a 2% improvement in their capture rate this quarter.
Now, for anyone who doesn't know,
Capture rate, what is that?
yeah, what is that?
So imagine you're running a lemonade stand.
Okay, I like this analogy.
You want to squeeze as much juice as possible out of each lemon, right?
Maximum lemonade per lemon.
Exactly.
Gotcha.
Capture rate is kind of like that for refiners.
Good.
It measures how efficiently they turn crude oil into those valuable finished products.
Like gasoline and diesel.
So a higher capture rate equals more profit from each barrel of oil.
So basically, they're getting more bang for their buck.
Exactly. And MPC's improvement this quarter.
It was better than all of their major competitors.
They're killing it.
Now, this is where things get really interesting to me.
Oh, yeah. Tell me more.
So MPC is putting a lot of money into their Los Angeles refinery.
Hoping to see a pretty nice 20% return.
And this is happening while some of their competitors are actually shutting down refineries on the West Coast.
Wow, that's a bold move.
It is. It's a big statement.
So what do you think that says about MPC's outlook?
I think it shows they have a lot of confidence in the long-term viability of that West Coast refining market.
Right, and as those competitors shut down,
Less competition for MPC.
which means potentially even more pricing power for them.
They're kind of setting themselves up to be the kings of the hill.
Exactly, and it takes guts to make a move like that.
It really does. But it also takes smart strategic thinking.
For sure.
And let's not forget about Marathon's midstream business.
Which they operate mainly through MPLX.
And this is where things get really interesting for those income-focused investors out there.
Absolutely, because MPLX, it's like a cash flow machine.
It really is.
Yeah.
And they just announced a 12.5% increase in their quarterly distribution.
Which translates to a massive $2.5 billion flowing back to MPC every single year.
That's enough to cover their current dividend.
And all their planned capital programs for 2025.
So what does that mean for you as an investor?
It means MPC has a really solid foundation for those shareholder returns.
Dividends, buybacks, they've got the cash flow to keep it all going.
And that, my friend, is the kind of financial stability that a lot of investors are looking for.
Okay, so let's talk about how they're actually using all of this cash.
All right, break it down for us.
Well, they just announced a 10% dividend increase.
That's their third year in a row with a really significant dividend hike.
And on top of that,
What else?
they also revealed a new $5 billion share repurchase authorization.
Bringing the total to a whopping $8.5 billion.
So they're not messing around when it comes to returning value to their shareholders.
No, they are not, but it makes you wonder.
What's that?
Can they keep up this pace of buybacks if the economy takes a downturn in 2025?
That is the big question, isn't it?
It is, and it's worth pointing out that MPC has said that they're comfortable operating with a lower cash balance than some of their peers.
Like how much lower?
Around $1 billion.
So they're willing to take on a bit more risk to keep those buybacks going.
It seems that way.
It'll be interesting to see if it pays off for them in the long run.
Absolutely, but one thing is for sure. MPC is making shareholder returns a top priority.
Absolutely.
Yeah, it's a bold strategy for sure. High risk, high reward though, right?
That's what makes this so interesting.
Speaking of interesting,
Yes.
let's move on to everyone's favorite segment.
Oh, you mean?
The outrageous but plausible trade idea.
All right, buckle up, folks, because this is where things get a little crazy.
Just remember, this is all hypothetical.
For entertainment purposes
But
only.
we're not giving financial advice here.
Just some food for thought.
Exactly.
So let's set the stage.
Okay.
We talked about how the West Coast refining landscape is changing,
Right, with those competitor closures.
and California potentially becoming more reliant on imported crude.
And a lot of those imports,
Where are they coming from?
Rick Hessling, MPC's chief commercial officer, actually mentioned this during the Q&A.
Yeah, okay.
He said a lot of those imports are probably going to be coming from Asia,
Specifically.
South Korea.
Okay, so here's the outrageous but plausible part.
I'm listening.
What if something happens in Asia? That sends crude prices skyrocketing.
Like, what are we talking?
I don't know, maybe a massive economic boom drives up demand?
Okay.
Or maybe some geopolitical event throws a wrench in the supply chain.
Right, some kind of disruption.
So those companies that are relying on those pricier Asian imports,
They're going to be in trouble.
their costs would jump.
Margins get squeezed.
But MPC,
Yeah.
with their strong West Coast presence
Right.
and their CEO's willingness to invest where others are backing away,
They could be in a really good position.
they might be sitting pretty,
Yeah, they could capitalize on those shifting market dynamics
potentially enjoying much higher margins.
while their competitors are struggling.
Now I know what you're thinking.
What's that?
That sounds pretty far-fetched.
Well, yeah, it's all speculation, but
It's not entirely outside the realm of possibility.
things like this happen.
Remember that whole Suez Canal blockage a few years back?
Oh, yeah,
That messed everything up.
absolutely. It sent shockwaves through global shipping and commodity markets.
So the point here isn't to rush out and place a bet on this exact scenario.
Right.
It's about understanding those global energy markets.
And how those unexpected events can create opportunities.
So if this idea has piqued your interest,
I encourage you to do some research.
dive into those crude oil market dynamics.
Look at regional refining capacities,
Think about how geopolitical events could shake things up.
because that's what we're all about here at Talk Tickers.
We want you to think like a seasoned investor
Look beyond those headlines.
and develop your own informed perspective.
All right, well, it's time to wrap up.
Yeah, we've covered a lot of ground today.
Refining fundamentals, capture rates, strategic investments, shareholder returns.
Even a little bit of outrageous but plausible trading.
We had it all.
MPC is definitely a company to watch,
They're making bold moves.
positioning themselves for success.
And they're doing it all while keeping those shareholder returns front and center.
We highly recommend checking out the full transcript and presentation.
We'll put links to those in the show notes.
Always good to do your own research.
We hope you enjoyed this deep dive into Marathon Petroleum.
And remember,
Keep those tickers talking.
until next time, happy investing.
Yeah.
And of course, we have to say it.
Always got to cover our bases.
The insights we share here on Talk Tickers.
They're for informational and entertainment purposes only.
We are not financial advisors.
That's right.
Nothing we discuss should be taken as a recommendation to buy or sell any stock.
Always do your own research.
Absolutely.
Consider your own individual risk tolerance
And consult with a qualified professional.
before making any investment decisions.
Couldn't have said it better myself.
Investing always involves risk,
That's right.
and the value of investments,
Can fluctuate,
past performance.
not indicative of future results.
So with all of that out of the way,
We want to thank you so much for joining us on this deep dive into Marathon Petroleum's Q3 earnings call.
we hope you enjoyed it
We hope you learned something.
and maybe even got a few ideas to explore on your own,
That's what we're all about here at Talk Tickers.
empowering you to be a more informed investor.
Until next time,
Keep those tickers talking.
and happy investing.